Hello trader, welcome to my YouTube channel. My name is Wasku Smart FX. Okay, on today's episode, we'll be talking about the kill zone. The kill zone plus the principle of fair value gap strategy. So the strategy we have been building since episode 1 to episode 5. The strategy we have been talking about from episode 1 to episode 5. Now we want to move a little bit further, and the little bit further we are moving on now is we are adding a kill zone, which means that there will be a time gap in which we are looking for this particular time frame, or we are looking for this particular strategy. So what is all about is that we this strategy, adding the kill zone to the strategy, to the fair value gap strategy, adding the two together, it is just for the an intraday traders. So which means that if you are an intraday, then you can trade, you can use this strategy. So whereby you only trade on 5 minute, 15 minute charts. So you can, this is the way, a way whereby you can be able to limit your stop loss instead of trading on 1 hour, instead of trading it on 15 minutes as a large. You can trade on 15 minutes actually, but this strategy now is talking about the fact that if you use a time zone, you only want to see your whole strategy to occur in a time zone, in a little time zone. It is called the kill zone. So it is called a kill zone. It is very it is very conscious time. It's very a very important time. Those two times I'm going to be listing out now, there are times that market opens during a section. Okay, so the first time zone we are looking at now is called the London kill zone. The London kill zone. Okay, the first thing you have to do, if you want to follow up with what I'm doing right now, is that you have to go to this place there. You see what you see here where my mouse is? You see time zone. So click on the time zone, then put your time zone in New York. So whenever you are in the world, put your time zone to New York, then we'll be on the same page. You just put your time zone at New York, then we will be on the same page. So my time zone is in New York. That's it. So the first time zone, or the first Q zone we are looking at, is the London Q zone. So the London Q zone starts from 2 o'clock in the 2 o'clock a.m. That's, you can see 2 o'clock a.m. here. That's this 2 o'clock a.m. It starts from 2 o'clock a.m. to 5 o'clock a.m. So this is 5 o'clock. So which means that you want to look at this whole zone, this whole time gap from this 2 a.m. to 5 a.m. You want to look out for the principle of fair value gap strategy that we have been teaching. Okay, for people that are like, this is the first video you are watching, this is the strategy here. We want to see market trading having a high, the market took out the high, the market change the structure. Then when market change the structure, you know, we have a high being taken out here. That's stop hunts. We have market break the structure, which can also be MSX market structure sheet, or it can be BOS market structure broken. Then you want to look into this range. You want to look for a fair value gap. So the moment you can spot a fair value gap, you want to see markets trade into the fair value gap, then and be a seller. That's for the selling. Then vice versa for the buying also. So this is the whole principle of fair value gap strategy that we have been talking about all these episodes. But today we want to do something more different, in the aspect whereby we don't want to trade on 1 hour. See, you can actually trade on 1 hour. I've showed you in my previous video that you can actually trade on 1 hour. You can trade on 4 hours. If you see all these things move on 4 hours, 1 hour, it is very, very good. You can trade it. It will give you more leverage. It will give you more confidence. It will give you more money. But for me and you, or for people that are they are trading intraday, they are a day trader, we have to reduce our stop loss. We have to come down to time frames, or to time zones, or to a time or a kill zone that we just have to trade in this little time, or go down to a lower time frame. Then look at all these things. I trade on 1 hour. I trade on 1 hour when I see my stop loss is small, it's not too big. Yes, I trade. I showed everyone out that I trade on 1 hour. But this strategy is just particularly for a day trader. Yeah. So let's go into it. So this is the first kill zone, 2 a.m. to 5 a.m. New York time. That's the London kill zone. So which means that that is the time the London section is beginning. So the first 3 hours in London kill zone, the first 3 hours, that is uh where we capitalize on as our kill zone. So you want to see when market opens, when the regional section opens, what does the market maker do? So that is what this whole kill zone is all about. So the second kill zone you are looking at is called the New York kill zone. So New York kill zone start from 8:30 to 8:30 a.m. to 11 o'clock a.m. So it's very small, right? So this is just a little time gap you want to trade from. So you don't want to go out of this time zone. You just want to stay in this time zone. Look at the whole strategy from this time zone. Everything that you want to do, everything that you want to see must be from this time zone. It must not be out of this time zone. Yes, it must not be out of this time zone. Let me reduce the this. Okay. Everything that you want to do must be inside of this time, these two time zone. You just want to look for our strategy. We want to look for our um fair value gap principle strategy inside this whole key zone. You can do it for as many days you want, but this is the way I trade my intraday. For those people that took my trade on and they see that I'm trading on 15 minutes, I'm trading on 5 hours, no, I'm trading on 15 minutes and 5 minutes, and they were like, "Oh, how do you trade? This is the way I trade it." So I want to see what market is doing inside this Q zone. The way market is out of this Q zone with two candle close, 1 2. I am not looking at anything again. The way market begins 1 2, then 1 2 close. I'm not looking at anything again. Do you understand? So let's look at this day. And this I always spot out some little things again, which is called the Asian. So you don't trade in the Asian section, but you have to understand the Asian range. You have to know that this is the Asian range. Okay, just put your uh just demarcate the 12 o'clock New York time, the 12 o'clock, demarcate the 12 o'clock. Yes. So anything from the 12 o'clock is called the Asian range. Anything from the 12 o'clock is the Asian range. So which means that we have this to be our Asian range. So let me print it red because I don't trade in it. So that's the Asian range. Then we have the London, then we have the New York. Okay, as we actually do, we usually see liquidity being taken out from Asian, and I'm expecting liquidity to be taken out from um both Asian high and low. I want market to take out the liquidity on both of the sides. Okay, let's focus on our London section and see what we can gain on this London section. Don't forget the strategy. Okay, let's go down to 15 minutes. Yes, 15 minutes. Let's go down to 15 minutes. Okay, this is 5 minutes chart here. So this is 5 minute chart you are looking at here. So you can see the Asian range. So this is where our focus is, the London section. So let's look at what happens before the London opens. So you can see this low here, this swing low here being taken out. Market was bearish. Market was bearish. You can see this also. You can see this low being taken out also. Market was bearish. Then the moment market gets to the London section, to London KILLZONE, market bearish, then market goes up. You can see, I want to spot out something here. It's called the fair value gap. There's a fair value gap here where I'll be expecting market to like trade into it, then come down. Let me pull out. Actually, it's not a strategy. Actually, this one here, I'm just showing you, or showing you that okay. So whenever market violates a fair value gap and break that same structure, it is a high confirmation to you that market structure have been shifted. Whenever market breaks or whenever market violates a fair value gap, and after violating the fair value gap, market now break the structure. You can see it here. After it violated the fair value gap here, market goes up and break this high. So we have a tangible market structure shift. So we know that market has been shifted because market violate a fair value gap. It did not respect the fair value gap. You can see this whole candlestick that closed above the fair value gap without any wick. Without any wick. So the second candlestick also goes above it and break its structure. So this is a very big confirmation that market is not obeying the sellers again. It is a confirmation that market want to shift. And okay, if you look at our strategy, stop on plus BOS or MSX plus fair value gap like this. Okay, okay, like this, then like this. You look at our strategy right now, so which means that there must be an MSS market structure sheet, there must be a stop on, and there must be a fair value gap. So you see the whole strategy. So if you look at this, this one that we're having here now, you see market take out the liquidity here. That's SH. So let me just put it as SH here. SH. That's the SH here. The market comes. Then I was so market violates a fair value gap. Actually, so I actually did not teach the secret of validation of MSS. I think I'm going to teach it in other videos. So, but for now, just take it as I say it. So, market uh, create an MSS here. So we have MSS. So don't forget the formula. The formula for our strategy is what? Stop ons plus MSS plus fair value gap. That is what creates our strategy. So we have stop ons, yes. We have MSS, yes. Now, do we have a fair value gap? Yes. This is the fair value gap here. So let me zoom out for you. Let me delete this so you can see what I'm talking about. So you can see the gap there. So that is the fair value gap we are talking about. So we have, so this strategy is complete. SH plus MSS plus fair value gap. Now, what makes the strategy now over complete is that we now be having what? Plus, that is the added, this thing we are teaching is plus what? KILLZONE. So these four key must come together for you to be a buyer or a seller using the strategy. You must combine these four things together. Are you in the KILLZONE? Yes. Do you have your stop ons? Yes. Do you have your market structure sheet? Yes. Do you have your fair value gap? Yes. Your fair value gap is your your entry point. Your fair value gap is your entry criteria. Your fair value gap is your entry you see what you are going to enter from. That's where your fair value gap is. And if you look at the old trade here, putting your stop loss below, now you can see the stop loss pips now. Pips. It's just 23 pips. That's very small for this trade. For gold, 20, if you see a trade of 23 pips, you should know that, oh, this person has been able to take the whole trade down to a lower time frame. And we look at how much you want to make. I'm able to target this um Asian buy side liquidity, because I really want Asian buy side to be taken out. You can see I'm making a 130 pips, but when I took the trade, I was unable to go there. This is where I get to. This is where I get to here. I just stop at 80 plus pips. Let me show you my Telegram channel. You know, every trade I'm showing out there, I always want to like show you that, oh, this thing is possible. You can do these things. It is very, very possible. You just have to discipline yourself. You have to be determined. You have to be determined. You have to be focused. You have to be able to backtest. Yes, backtest a lot. Sharpen your eye. Let your eye to be able to see. That's the very, very important thing. The ability to see. See, to beyond the ability to know, beyond you watching this video, there's another ability whereby you have to develop in yourself. It is called the ability to see. You see, if you turn this chart all around, I can show you another way this chart can be seen. It is called the demand and supply. If I draw this chart again, or maybe you see somebody else chart, you will see that the person will draw it in another way, and you'll be like, and the funniest thing is that the person can make money in the chart also, and you'll be like, oh, why is everybody doing different and they are making money or they are losing money? So the thing is not about what you are doing. The thing is the ability to see. You have to be conscious. You have to discipline yourself. You have to determine. You have to be diligent. Back testing it so that you can be able to see it. So that's just the word I have as a trader to my fellow trader too. So this is the trade here on my Telegram channel. So you can see it here, gold buy limit 2391 and take profit 2398. So that is one more, how many pips? So that's 70 plus. That's 70 pips, right? So you can see the whole trade here. This is what I was looking at. You can see the fair value gap. See the fair value gap I was looking at there. See the stop on the the market structure broken. So you can see this is actually trade that works. So you can see when the trade was going by, this was traded live. Yeah, when it was 20 pairs, this was traded live. A lot of people took the trade, and I also took the trade personally also. So when you take profit. So you can see how it moves. So what I'm trying to show you is not uh is not about it's not about uh not taking the trade. You can even see somebody said uh I would hold on to the Asian high, and I said yes, you should take it, because that is what I was expecting actually. But because I don't want to let people to risk their money, I only want people to take out profit from where they should be able to take out profit. So this is just my word to people there, my word to fellow traders. These things are working. Yeah, it's not about the hedge. To make money in the forex market is not about the hedge. It's about your mindset. It's about the way you see market. It's about your focus. It's about your diligence. Are you diligent about it? Do you want it that bad? So it's about yourself. It's just about you versus you. So do well to like, share, and subscribe this video. Share it to as many as people you want them to see. And don't forget also, if you want to join my Telegram channel, the link is in the description. Just click on the description, you will join the channel. It's very free to everybody. So thank you very much.